Tesla is now down 50% from all-time highs as we've seen FUD continue to plague Tesla stock as well as overall macroeconomic conditions. As we all know, the Federal Reserve has raised interest rates. It has hit the tech sector the hardest out of all sectors of the market. We've seen that interest rates have been continuing to rise. Inflation really hasn't dropped as much as everyone would like. And Tesla in particular has had a lot of FUD come out as of recently as well. But the good news is that Goldman Sachs just doubled down on their bullish call for Tesla, saying there's more than 50% upside from where it currently is. And there are a few things going on that no one is talking about for Tesla stock, which makes me extremely bullish at this current price. I've personally been dollar cost averaging, buying more, especially around this current level. So right now what we've seen is that Tesla is currently trading around $204 per share, down 50% from its all-time high. Its all-time high was over $409 per share. At closing, its 52-week high overall was at $414.50 per share. But the good news right now, I wanted to quickly interrupt today's video to bring you a word from our channel partner, Fire. Fire is a layer 1 patent-pending sustainable blockchain ecosystem at the consensus level with a mission to make blockchain sustainable and accessible for over 1 billion people by 2030. And the way it works is Fire uses machine learning to track 700 plus ESG data sources in real time to form a sustainability score for the validators on chain. Its transparent on-chain governance mechanism allows everyone to participate in the network democratically and propose changes that assure a justified, fair representation of all the stakeholders. It's a 5th generation blockchain that ultimately wants to bring a shift from a for-profit to a for-benefit economy. And the cool thing about Fire is that large institutions are already pouring tens of millions of dollars into this project, despite most retail investors not knowing that much about it. They've already raised over $100 million from some of the biggest investors in the world, are currently India's 105th unicorn company, meaning they are valued at over $1 billion, and they've been featured by dozens of the top media sites in the world. I think Fire's blockchain is one that governments and large institutions will ultimately use long-term as we see a bigger and bigger push for sustainability and as blockchain gets more integrated into everyday life long-term. This platform is definitely worth checking out, in my opinion, if you're interested in profiting from the crypto market long-term. So use my link in the description and check out Fire today. Anyways, let's get back to the program. Is that we're seeing that there's a lot of things to be excited about despite FUD. Right now for FUD, we can see that there's been 3 main things. The first is that vehicle delivery in the third quarter took a pretty big hit due to logistical troubles, and some analysts are warning that climbing prices of the company's car may weigh on demand as we potentially go into a recession. They're saying, look, these cars are too expensive for a lot of people, and that's going to really hurt demand. Second big issue that a lot of people have been trying to push and really contributing to the FUD going on with the stock is that Tesla's factory in Shanghai has had disruptions. A lot of had to not operate at full capacity simply because of COVID-19 lockdowns in the city. While this is true, you got to remember there still are other factories all around the world that are continuing to produce Tesla vehicles, and they don't all experience issues at the same time, simply one out of their many factories. And third thing is the company has also dealt with supply shortage and a surge in raw material costs. This has been a consistent thing across the entire automotive sector. It's not just Tesla. We're seeing GM, Ford, all across the board. This has been an issue. So in reality, this isn't going to affect Tesla stock more than a GM stock or another car company stock, simply because it's equally affecting all companies in the car sector. So what we're seeing right now is that's all the FUD, but there is a lot to be excited about as an investor. First thing that we're seeing is that Goldman Sachs just recently came out and doubled down on their bullish Tesla call. They're predicting that Tesla is going to reach over $300 per share because they say they believe Tesla, given its leadership position in EVs, including its vertical integration and tight coupling of hardware and software, as well as its whole ecosystem with charging stations, its brand, they said they think it's the best position to capitalize on the long-term shift to EV. And what we're seeing right now is that most car manufacturers are projecting that they're going to be completely EV by 2030 at least. So this is something where Tesla is already capitalizing on. And as we see more companies switch over to EV fully, Tesla's already in a much better position in terms of infrastructure, in terms of production. They are just leaders all across the board. In addition to this, Goldman Sachs also says that they expect Tesla to expand margins in the medium term as they ramp up the important Model Y product, as well as new factories in Berlin, Germany, and Austin, Texas. They say that this is going to ultimately help their bottom line long term, as well as they continue to increase software revenue. So that is why that Goldman Sachs is predicting that Tesla is going to rise to over $300 per share, and that's why they've doubled down on their bullish Tesla call, which is pretty surprising for a lot of people on Wall Street, that Goldman Sachs, one of the biggest institutions in the world, is projecting Tesla to completely outperform the market when a lot of people on Wall Street simply don't like Tesla, but they have $305 price target. In addition to Goldman Sachs, Cathie Wood, long-term Tesla bull, has come out and said how right now they are still buying and accumulating more Tesla stock, how they are extremely bullish on it long-term, because they think that gas-powered vehicles are going to be completely obsolete within the next 5 to 10 years. And they say that the traditional auto industry has to figure out a way to migrate over to electric vehicles in their next big shift and next big phase. But Tesla has already done this. They also say how in the next phase for Tesla, which they believe is autonomous taxi platform phase, they think Tesla is already so far ahead of the entire industry because of all the data they've been able to collect from their self-driving softwares, and that has been running for years now. So they said they are so much further ahead in data, and that is going to position them in a far better position than any other car manufacturer. So these are the people that are bullish. The one thing I would say with Tesla right now, and why I am bullish on it, is what we've seen recently is their numbers have consistently been growing. We see, if we're looking at Tesla EPS, we can see that it has consistently increased over the last 3 years. If you look at the last 3 years, it has gone from negative in January of 2020, and consistently every single quarter has risen. It has not fallen any quarter. Yes, we're projecting that we're going to see another increase in Q3 of 2022 when earnings come out very shortly, but we continue to see numbers increase for EPS, which is a very strong sign for an investor, seeing that EPS has gone from negative 20 in 2020 and every single quarter has gotten better, not dropping for a single quarter. That's a bullish sign. The one thing I would say is that Elon Musk right now, we all know he's potentially buying Twitter. Like, it's basically guaranteed at this point that he is buying Twitter. And the one problem for Tesla in this is that Elon Musk is probably going to have to sell more Tesla shares. Not because he wants to, not because he's trying to take profits, but simply because most banks and firms that had originally committed to helping Elon Musk fund the deal to buy Twitter no longer are interested. They no longer are going to with the current macroeconomic environment, with interest rates and inflation. They're simply not going to do it. So Elon Musk, the only place he has more money is in his Tesla shares, meaning he is selling them without really wanting to sell them. It's out of necessity that he is going to be selling Tesla stock. This is a good news for us. It means that, yeah, Tesla might drop in the short term, but it's no reason other than Elon Musk has to sell his shares to buy Twitter. It's not that he wants to. It's not that there's anything wrong with Tesla stock. He simply has to do it out of necessity. And that creates an opportunity for everyone else, because whenever we see Elon Musk selling, that's going to project negatively on the stock. But there's no fundamental shift in the overall company. It's just the shift that Elon Musk is selling. So ultimately, that creates an opportunity for us to get in much cheaper than we would have been able to. And that is why I'm continuing to buy at these prices. But let me know what your thoughts are on Tesla. Are you bullish? Are you bearish? I very well think we will see $300, $400 per share for Tesla very soon as we see the markets flip. We've seen Tesla stock been very volatile as of recently. If you look just in the last month, we were well over $300 per share less than a month ago. Now we're almost below $200 per share. So I have been buying ever since we have dropped under $250 per share, because I'm a long-term investor. I believe in this company long term. I think they have a lot of fundamental advantages over other car companies, but let me know your thoughts.